Hola mi gente, welcome back to the channel. My name is Sean. This is We Are Investing, a channel that's dedicated in investing and personal finance. And on today's video, we are going to do a deep dive regarding support and resistance lines. We'll talk about how to chart them and how to trade them as well. Now, before we get started, just know that Webull currently has a limited time offer that is definitely worth mentioning, and Webull is a great brokerage in my personal opinion. If you sign up with the link down below in the video description and deposit 100 US dollars, not only are you rewarding the channel, but you're also going to get rewarded with six free stocks valued up to $12,600. Webull charges $0 in commissions for stocks and options, and you can start trading at 4 a.m. and until 8 p.m. On top of that, if you join the Patreon, links down below, you can get access to a private Discord server. It's in that Discord server where I notify all members. It's essentially a huge chat room for traders and investors. I notify all members through a dedicated members activities channel on all stocks that I'm buying and selling. These are real-time trade alerts. All right, let's get started. What is support? A support is an area where buyers are more likely to step in and sellers are more likely to stop selling because it's a point based on technical analysis where it looks like the stock is very cheap and therefore buyers are going to come in, or at least it's a point on the charts where it seems very likely the stock is going to rebound, so that persuades buyers to come in. The stock market is a market and it's all about supply and demand, and when a stock is at support, that is going to increase the demand for that stock, at least in theory. If you take a look at this photo, you can see there are times where the stock in the past has bounced off of that price level where that horizontal line is drawn. That first bounce then acts as a support for the next time we hit that price. So because we bounced at that level before, there's a good chance we're going to bounce at it again. And if we bounced off of it twice, 2 times prior, then that increases the probability that we're going to bounce off of it again. And in this case, the stock bounced off of it 4 times. That horizontal line is your support line. Now, resistance is just like support, but instead of a stock bouncing off of that level and moving higher, with a resistance, the stock cannot break that price level and it heads down. That's why it's called a resistance. The stock, in theory, has tried to get above this price multiple times in the past and has failed to do so. So in a resistance area, you are decreasing demand and you're seeing people start to sell the stock and not come in and buy it, and that's why you're seeing a decrease in that stock. As indicated by the chart down below, you can see that the stock tried to break through a price once before, it failed, and the next time it got to that price, it failed again, and that is your resistance. Now, support and resistance are not always horizontal lines. Sometimes they can be trend lines as well. A lot of the time, they're going to be horizontal lines that you draw on the chart. But sometimes you can draw a trend line and you can have a channel. The upper portion of that channel is your resistance. The bottom portion of that channel is your support, as indicated by this photo here. And as described by the definition of trend lines, these are bounding lines. They are lines drawn on a stock chart that connect two or more price points. Since stock prices tend to trend lines that connect the highs or lows in the stock's price history can help identify the current trend and predict what the stock might do in the future. And like I said, support and resistance lines can be horizontal. They can just be a straight line across at a fixed price point, but sometimes they're off of a trend line and your resistance might be at a higher high. But typically, if it bounces off that trend and remains in trend, you would see it pull back until it hits that bottom portion of the channel, and then you would see it move higher. Now, with that being said, I want to show you how I personally chart support and resistance lines. There's a few things that are going to matter. The type of trader you are is going to impact what support and resistance lines you're looking at. So there's a difference between charting support and resistance lines for day traders and swing traders, and we'll explain that when we head on over to the charts. It's also important to create a system, which I have my own system. I'm going to show you the system that I personally use. And time frames are going to matter. This is going to relate to what type of trader you are and what charts you like looking at. And it's also important to look for multiple occurrences so that you identify support and resistance lines that have some relative strength. I'm also going to show you how to trade support and resistance lines. We'll hop into the charts and we'll go through simulated trades to show you how I personally trade support and resistance lines. I'll use trades that I've actually executed, trades that I notified all the members on that private Discord. But essentially, in order to trade support and resistance lines the way that I like to trade them, you are looking for estimated strength of support and resistance. This is based on the time frame and the number of occurrences. You're looking at the overall trend of the market and that particular stock. You're looking to combine support and resistance lines with other studies and technical indicators. You also need to be patient and wait for confirmation. So identify support and resistance lines before they actually get to them. Wait for them to actually act as support and resistance lines. Let's say you have a line drawn at $10 and the stock is at 12. Well, it approaches it, it's at $10.25. You buy in because you think that's going to be support. It's actually not support. The stock falls to 9. You never waited for confirmation. That's a losing trade. So it's best to have these charted before and then set alerts and wait for confirmation. You want to also have a plan. You want to manage your risk. So before you actually execute a trade, know what you think the stock is going to get up to. So that's your profit and how much you're willing to risk. What is your max loss and where are you going to stop out of a trade? And then lastly, you just want to keep it simple and remove all emotions. With that being said, let's hop on over to the charts and I'm going to show you how to chart support and resistance lines and then how to trade them. All right, so here we are. We're on Thinkorswim, and I'm going to show you how to chart support and resistance lines, or at least how I do it. Now, basically how I do it, this is the view that I typically have on Thinkorswim. The chart on the left is going to give me the daily chart. Then I have on the top right the 1 minute, the 15 minute, and then a weekly chart. What I'm going to do to make this a little bit easier for you to see is I'm just going to look at one chart at a time. But I wanted to show you this because this is essentially going to give me everything I need to draw support and resistance lines, or most of what I need. I'm going to start by drawing support and resistance lines on the daily chart. Now I'm a swing trader. I'm looking for trades that are going to be at least a couple weeks long. So the daily time frame works well for me. If you are a day trader, well then you're looking for intraday support and resistance lines. And maybe you're looking at a 30-minute chart, or maybe you're looking at a 15-minute chart or an hourly chart. I don't know. It depends on what you do. I'm not a day trader, so I can't say which works best for that. But for swing trading, I like looking at the 1-day chart, the weekly, and also the monthly to get a really strong support. So let's look at just one. We're going to start by the daily. Now, I already have support and resistance lines drawn because this is a stock that we did enter into a trade. And this is perfect because then I can show you my system. And it's a color-coded system. And it's these horizontal lines that are dashed. These are the support and resistance lines. So what you want to look for in drawing support and resistance lines are prices where the stock has bounce. Either it's hit a point and it moved higher, or it hit a point, could not break, and moved lower. So obviously looking at this chart right here, there is a resistance right here at around $93.73. That was the high. So since this is the daily, what I personally use is I use the color green for daily because daily stands for dollar and the dollar is green. I like using this because then when I'm looking at a different time frame and I see a green horizontal line indicating that there is a support and resistance, I then know from what time frame is that support resistance line. If it's from the daily, that's good information to know. If it's a white line, well then it's from the weekly because weekly starts with W, so does white, so that's a weekly support and resistance line. And if it's from the monthly, well, then it's going to be a reddish maroon color. Monthly starts with M, so does maroon. And that is my color coding system. Now, if I'm looking at a support and resistance that's off of a 15-minute or a 30-minute, I don't give much strength to those, so I'm just going to draw them in a light blue, and then I get rid of them once they have been broken or are no longer support and resistance lines. So to get started, all we need to do is add a couple lines to this chart because I don't have the top here. So the way that I do it is I create a price level and I just double snap there, double click. Now this is from the daily chart, so we're going to make it green and then we're going to make it that dashed line. Once I have one line drawn, it's real easy. All I have to do is hit duplicate drawing and then I can move it down. So the stock did bounce right here, so that's another support and resistance line off of the daily time frame. Now, it's important to know what to look for. So the top's an easy one to draw, so is the bottom. But right here, for this one, as you can see, we're going to draw a little area. This is a nice support and resistance line because it has multiple occurrences. Right here, right here, right here, and right here. 4 times. Now, it's important to know that prior resistance becomes future support. Let's take a look at that a little bit more. So we had this resistance here. We could not break through it. We bounced off of it downwards. We got rejected. We moved down. Then we moved higher. We retested that prior resistance, which now acts as future support, and then we moved higher. So that's also very important to know. Now, the reason why I like to do these in color coding is because I give more weight, or I believe a support off of the weekly chart is going to be more powerful. So for that, I head to the weekly chart and I'm looking for support and resistance lines off of the weekly as well. So I have one that's the top right here. I also have another that is the bottom of this candle right here. And based off of that, I have two, and we tested that range here. So if we hop back onto the daily chart, once we tested that range, me personally, I thought that it was a good time to get into the stock. And look what the stock did. We tested that range. We were oversold on the RSI. That's important to know because that is combining support and resistance with other technical indicators such as the relative strength index. So what I saw in this was that we were at a weekly support and we were also oversold on the RSI. This presents us a good opportunity to get into a swing trade off of a reversal, meaning that we are going to bounce off of that support line, and also we are going to then move higher in the RSI. And that's exactly what we did. We into a swing trade. We notified the people on the private Discord server that, hey, we're going long on a trade on Next Era Energy. We're going to be buying a call debit spread on this stock because we think it's going to bounce because of those technical indicators. That's how you trade support and resistance lines. You look for support and resistance, you chart it using a system. It's a color-coded system for me because that's going to help determine what the projected strength of that support and resistance line is. You're going to use it with other technical indicators, and you're also going to wait for confirmation. As we can see here, this is our range here. We actually ended up breaking that support if you want to consider this wick, but we bounced higher and we broke above that other support. So we were in this range, we broke above that, and we continued higher. We want to wait for confirmation even more. Well, when we broke higher and we dipped down below, or we dipped back down, we bounced off of that support. This area right here is your confirmation. This is your strong confirmation that this support is holding and it's time to get into a trade. And from that area, even if you were to buy there and waited a little bit, the stock is up 11% in 14 days. If you trade options, depending on what expiration date you pick and what strike price you pick, you could be up a lot. My position right now is up 92% on this swing trade. And these are the types of trades that I like to get into. Trades that are at strong support and resistance lines. You combine it with an overbought or oversold on the RSI. You wait for confirmation, and then you're looking at the stock, the sector that it's in, and it doesn't make sense that we could actually rebound from these levels. A utility company like NextEra Energy Incorporated is going to be fine during a recession. These are the types of stocks that people want to buy in this market, in this environment. So it made sense there as well that this stock should rebound. Now I want to give you one other example of charting this because I want to provide an example that has a trend line. And what we're looking at is the S&P 500 futures. These are the micro E-mini S&P 500 futures. And what we can see here by this green line. So this is the daily chart. That's why it's green. And for trend lines, I use a different style. This is my system. Instead of that dash line, it's more of these like blocks. So this is the system that I use. Now, as you can see, I have support and resistance lines that are green and that are white. And white is a much stronger support and resistance line. We also have this trend line. So here was a low, here was our next low, here's another low, and here with this white line is our support on the weekly. So actually what we see with the S&P 500 is that it bounced right here off a trend. It bounced near a weekly support, which corresponded to a 20% drop peak to trough. So this is official bear market territory. We also use these support and resistance lines to see how strong the rebound is. Well, we broke this resistance, so maybe we're going to head to 4,300. And if we remain on trend, which is this upper trend, we could get anywhere up to above 4,400, maybe test 4,475. I don't know if that's going to happen. Trend doesn't always remain the same, but these are good indicators to have to see if the market is behaving in trend or a particular way off of support and resistance lines. I'll tell you what, if we get to 44,750 and we're also corresponding to an overbought on the RSI, it's time to short the living hell out of the market. Because if you consider the overall macroeconomics or the macro conditions that we're in, it's unlikely that we're going to see or test those prior highs in this kind of climate. But we could very well test this higher trend level, and people can then start getting FOMO and buying in when they really should be shorting the market and fading their positions because this is an upper resistance. It's important to have these lines drawn on your chart so that you're not getting emotional. It's just price points. It's just lines on the chart, and you just see if these support and resistance lines actually behave the way that they should. If they break and we continue to see higher highs, well then the market is very bullish. If your support lines are not holding, well then the market overall is very bearish. And that should impact how you position your portfolio and what kind of trades you're getting into. All right, mi gente, that pretty much wraps it up for this video. I thank you so much for your time. If you like content regarding investing and trading in the stock market, then definitely consider hitting that subscribe button, ringing that bell, and smashing that like button. Do not forget about those free stocks worth up to $12,600 on Webull. Do not forget about that private Discord server where you get trade notification alerts. With all that being said, that's a wrap. I thank you so much for your time. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.